Welcome back to the channel, guys. My name is Gordon Frayne. We are back talking about the outlook for the next 12 months in the crypto space. I think the next 12 months are going to be super interesting when it comes to price action. Let's get into today's video. As always, if you enjoy the content, please make sure to give it a thumbs up below. Hit that subscribe button as well. Smash the bell notification icon. And don't forget to grab your completely free copy of The Rise of Bitcoin. It's linked below this video down in the description. Go ahead, grab it now for free, and let's talk about the market. So Bitcoin has obviously pulled back a significant amount here since its middle of January highs. We got all the way up to $109,000. We're currently sitting at 84,275 at the time of recording this video. And what we've been trying to do is break back above the 200-day simple moving average for Bitcoin here over the past 7 to 10 days. We did momentarily get above it here. This was March 19th when we had the Fed Reserve meeting. We didn't get a rate cut, but we did have some dovish sentiment from Jerome Powell, considering the fact that we might get some rate cuts later this year. So the market was running up on Wednesday, but it gave it all back pretty much, or at least 75% of it back here the following day. And we've been struggling to get back above the 200-day simple moving average. I did make a point in a video a couple of weeks ago that the M2 global liquidity has been on the rise all throughout Q1 of 2025. And again, what we've typically seen here with global M2 is that Bitcoin will follow global M2 82% of the time. And this global M2 chart has a 76-day offset because the time that it takes Bitcoin to follow M2 historically has been roughly 10 to 12 weeks, or somewhere between 70 and 100 days. So again, nothing guaranteed here, but maybe by the time we're moving into April, we could see Bitcoin start to tick and move to the upside again to follow M2. We did see it following pretty well here back in 2024 when global M2 had a big run up in Q2, Q3. Bitcoin followed into Q3 and Q4 with a big run up in price as well. So I think the macro picture is worth remembering here, especially when we have these pullbacks in price, because Bitcoin sitting at 84,000 is a much better buying opportunity than Bitcoin at 109,000 at previous all-time highs. I still don't think this has been the peak for this particular cycle. And again, not financial advice, guys. Make sure to do your own research. A few other things I want to make a point of to drive home what's actually happening or has the potential to happen over the next 12 months. The United States has to refinance $7 to $9 trillion of US debt. Again, the amount of debt here is a phenomenal debt wall represented in this Bloomberg terminal chart here. This has to be rolled over later this year. And in order to do that, rates will need to come down. Trump has been calling for Jerome Powell and the Federal Reserve to cut rates. We did not get a cut in March. It's looking slightly more likely that we might get a cut by the time we get to the 7th of May. But I will be watching this CME Group informational chart to see how this percentage changes and possibly increases as we approach the 7th of May. Some of that is going to have to do with what's happening in the stock market and with the tariff situation we've been seeing. But I would anticipate this increasing ever so slightly as we move towards the middle to end of April and towards that 7th of May FOMC meeting. We have to wait and see what's going to happen. But from a macro perspective, simply refinancing this debt at current interest rates is going to be super expensive. And they will want the rates to be lower in order to refinance this debt and push it out somewhere between 2035 and 2039. The next thing I'm looking at is crypto fear and greed index. Again, we've seen this coming down to lows of around 14 and 17 on the crypto fear and greed index scale over the past couple of weeks. Historically speaking, this is the best time to be buying Bitcoin and crypto. Again, looking at these lows from back in September of 2024, this low at the beginning of August 2024, these lows back here all the way in August and September of 2023, historically speaking, the best time to be purchasing and accumulating crypto so you can ride up the price action in the market. The fear and greed index having a fantastic correlation with the price movement of Bitcoin until it gets into these overbought areas and eventually with that greed index getting up above 80 and 90, you see it coming back down. It can't remain at those levels forever. And of course, selling off when fear and greed index is at its highest point has historically been a very smart move to ride the wave down and start purchasing again at these lows when fear is getting below 30, 20, and even into the teens, which we've seen again in the past couple of weeks. And I know it's not easy, but when you think about the opportunity here, we do always see this revert to the mean and then get back into extreme greed territory. So taking this as a buying opportunity, again, not financial advice, guys, it could be interesting to be scooping up some Bitcoin and maybe even some of your favorite alts at these prices today compared to where they were at just a couple weeks ago. Bitcoin is down 23%. If you were purchasing Bitcoin in this area and you were bullish on it, you should be even more bullish at these prices today. You're essentially getting a 23% discount. Okay, the next thing I want to look at is the cycle low multiple. And again, we've looked at this many times on the channel, but historically speaking, again, if we're looking at this 4-year cycle, and when I refer to the 4-year cycle, I'm talking about the halving cycle for Bitcoin represented by day 0 in this chart. We're looking at era over era or cycle over cycle performance for Bitcoin during the past number of cycles. And typically speaking, somewhere between 500 and 600 days post-halving event, we do see the market peak or the cycle peak for the price of Bitcoin. You can see that here happening, maybe around day 550, roughly speaking, after each of the 3 previous halving events. Currently, with this red line, the trajectory that we're on, we are a little bit lower compared to some of the previous cycles, but we are only 334 days post-halving event. We could be looking at another 200 to 300 days before we get to that cycle peak. And again, looking at this next 9 to 12 months, presenting itself as the opportunity where prices could go much, much higher. Again, nothing is guaranteed. We have to wait and see. But again, historically speaking, that 500 to 600 day post-halving event period is typically when Bitcoin is putting in those cycle highs. Okay. Another thing to consider is the amount of Bitcoin positive sentiment brewing under the surface, not just in the United States, but in multiple countries across the world. We're seeing Bitcoin strategic reserve being created in the United States, a digital asset stockpile at the same time. We're going to look at stablecoin regulation in a moment because I think that's extremely bullish as well. But looking at these numbers, some of the countries leading the charge in terms of Bitcoin accumulation and strategic holdings from nation states. I think the game theory of not just nation states, but corporate treasuries continuing to add Bitcoin to their balance sheets is only going to increase over 2025. And as we move into 2026, it could be a fantastic opportunity, again, to be getting in at these prices before we really see things moving higher when all of these positive sentiment events that are brewing under the surface raise their heads later this year. In my opinion, I think we're going to see the floodgates opening when rates come down, when we see Bitcoin starting to follow global M2 a little bit more to the upside. Again, not financial advice, guys. I'm just giving you my opinion. Okay, we obviously saw the establishment of a strategic Bitcoin reserve and digital asset stockpile. Just like I mentioned, it did become official just a few weeks ago. And I think what you're going to see is the US government, David Sachs, the crypto and AI czar, along with the team that he works with, coming up with creative ways to continue to add Bitcoin and digital assets to the stockpile without having to force taxpayers to pay and eat into their hard-earned tax dollars. You are going to see creative ways, in my opinion, for them to accumulate more Bitcoin, whether that is from, confiscated Bitcoin from, criminals or whatever it is. I think we're going to see that stockpile continue to grow. There's different bills being put through the Senate with Senator Loomis as well. I'm interested to see what comes out of those, but so many positive undercurrents that are yet to really come to the surface that I think are going to play out later this year. And finally, I think this quote that we saw from US Secretary of Treasury Scott Bessent, we are going to keep the US the dominant reserve currency in the world, and we will use stable coins to do that. Stable coins have been, one of the most boring things in the crypto space, historically speaking, but the fact that they add so much liquidity into markets and into different blockchains means that once we get further regulatory clarity from the US government about stablecoins and how businesses can begin to use it in a much more fluid manner, and how it will become essentially a way for the US dollar to maintain its status as the world reserve currency, we're going to see the US government, in my opinion, making big moves to tokenize as much US dollars on chain as possible to cement its status as the world reserve currency in this new digital paradigm. I think this is one of the most underrated areas in crypto right now in terms of the impact it will actually have in the medium to long term. Once you see the US making that move, you're going to see Europe, China, Russia, everyone following suit to continue to tokenize their currencies on chain. And again, blockchains like Ethereum, Solana, Sui, you're seeing huge amounts of tokenization happening on chain, with USDC and Tether continuing to mint more and more stable coins on chain, and that trend is only going to continue. There's so many benefits of having tokenized versions of the US dollar on chain, and you can already see Scott Bessent making comments that they want to dominate the world reserve currency status with the US dollar, and they're going to do it with stablecoins. I think this is such a strong mark of positivity and authority that the US is going to make this move in the coming months. And I think spring of this year, in the next month or two, is really when we could be seeing some confirmation of that regulatory clarity in the United States. So I think there's so much bullish undercurrents happening in the market right now, guys. I wanted to make a video just to update where my head is at and what I'm thinking as the opportunity presents itself here when Bitcoin is at a 23% discount compared to these highs, and when fear and greed index is at such a low point compared to where we were at in the middle to end of December and moving into January. There is such an amazing opportunity here. Don't fade the opportunity. Check it out for yourself. That's it for today's video, guys. As always, if you got any value at all, please make sure to give the thumbs up button below a smash. Make sure to subscribe, hit that bell notification icon, and don't forget to grab your completely free copy of The Rise of Bitcoin, linked below the video. Grab it down below, and we'll catch you in the next one.